Welcome everybody. Hello. So welcome to listen to this podcast about the TMT M&A prediction for 2026 hosted by Analysys Mason. Today you're here with Alessandro Ragnolo, myself, partner in the London office. I'm joined by
Charles Murray, also partner in the London office.
So this is not the first year we're doing M&A predictions for the TMT space. Actually, this is something, kind of a tradition in the team, right? We started back in 2018. So it's many years now. We started from a small article in the room, writing an idea. It was a much smaller team. And now it evolved in something much more structured. And this is the first year we're doing a podcast. So you can listen to us. You can watch us, unfortunately. So it's the first time. It's a bit of an experiment. So please bear with us. But I also giving you a clue. You can also look back our previous M&A predictions, check them out, see where we were right, where we missed the target. We might have been wrong. That's all.
We'd never be wrong, obviously, never.
But it's always an healthy debate. There is always a good excuse in any case. This is the first year of the podcast. We have exciting guests. You will probably want to hear from them more than you want to hear from us. But just a quick look back at 2025 for Analysys Mason and for the transaction team. 2025 was a very exciting year. It was a year of growth, learning. We had a lot of exciting events, exciting opportunities. We had fresh new go-to-market strategy. We welcome new exciting colleagues. You're going to hear from them, from some of them shortly. And we also met great new clients on the way with whom we tackle new business models. So we plan to really continue these exciting things happening also for 2026. Just to give you some idea numbers, the numbers have gone up over time exponentially, and now we are supporting in 2025 over 210 deals in the TMT space, ranging from more traditional telecom digital infrastructure for us to new exciting areas like satellite, space, software, tech-enabled services. That was really great, and it was with great pride that we saw the team expanding, growing, maturing globally and across different regions. Without further ado, let's move to the first prediction. What do we have first, Charles?
Well, talk about our new colleagues. Delighted to welcome Simon Fisher, managing partner in our new Munich office. Simon, over to you, please.
Thanks for having me here on this podcast for the first time. New partner to the club, new kid on the block, so to say. So it's really nice. Just as a quick insight, so I've been doing mostly work in the IT services and software space for the past decade. So I'm bringing maybe some news and some insights into the Analysys Mason ecosystem that we haven't had a chance to speak about in the past too much, right? So I'm very happy to be here. And after so many years in ICT and seeing AI emerging in the last years, I mean, it's obviously the most quoted buzzword of all times. My prediction for the following year is that after 25 has been a year that's been really about integration of AI systems in IT firms and ICT and MSPs in particular. I think in 2026, we'll see the harvesting of those efforts and of those initiatives, and we'll see valuations changing for ICT firms that are really good in using AI and those really poor at not delivering on the promises. So that's my prediction, that there's a widening gap in that space.
So we're talking about AI, right? Which is great. We cannot avoid talking about AI now in 2026. To what extent do you see really AI being a real implementation in ICT service companies?
Yeah, I think
How much actually marketing effectively, right?
Yeah, sure. I think by now there's more than marketing, right? There's more than buzzwords, particularly in ICT. From the work that we've done, we see more than half of professional ICT firms, right? Not the mom and pop IT reseller that sells you in your laptop, but the real ICT firms. I would say the majority of them, they have delivered on implementing AI in customer service and service delivery. So you see certainly a lot of work that's been done there. This is more than marketing. You see also them being able to bundle that in terms of service offering and what they kind of deliver to the customers in terms of products and sales. But very few have really been good in delivering this internally, right? So the typical thing that ICT firms are bad about their own IT is true about AI, right? And therefore the kind of client zero mentality that you would expect an IT firm to have on AI, that's certainly not taken place yet.
Wait, any further question?
No, I'm just very excited by the potential of AI. There's a lot of hard yards, I think, to go with it in terms of implementation. But certainly the more nimble companies are going to benefit from implementing AI, just working out cleverly where to implement it, where to focus initially, rather than try and do it everywhere. I think is focus and effort and driving it to actually succeed is really important. So it's a lot about implementation.
And I guess, Simon, the key questions for you as advisors on deal is how to call out who did it. How do you call out who did it well, and how do you spot actually who didn't do it correctly, or actually doesn't do it for real? Is just really an information teaser, right?
Yeah,
for investors.
So what's marketing and what's not, right? So at the end of the day, if I look at firms like that, and I've been doing a lot of due diligences in this space, I think one of the things is you find evidence of really good AI implementation in the organization itself, in the sense that they have specific roles designed to that. And we're not talking about AI officers, right? Everybody can call himself an AI officer, but we're talking about data stewards, people that really take care of the ins and outs of those systems. And you would want to find those people close to the CEO office, right? It's a CEO agenda item, and you would want to see that being really, really close to the top management priority list. Secondly, what you find that ICT firms need to partner with vendors, otherwise they're not able to deliver properly. So that's something you would want to see them building partnerships with strong vendors in the space. And lastly, you would want to see results in terms of efficiency gains and ticket resolution timing and all that, effectively making them better firms. So I think a couple of items to check on the DD list.
Sure, I'm sure they're on your DD list straight up. Yeah, thank you.
If you have any question about AI implementation in the ICT service space, look no further, just contact Simon and he will be there for you. Right, and it's now time to move to prediction number 2 from our colleague Sylvain Loiseau in the Paris office. Hi Sylvain, welcome.
Hi everyone. Glad to be here. I'm Sylvain, I'm principal in the Paris office of Analysys Mason, and my prediction this year is that NeoCloud, or what we call GPU as a service, which are cloud players that are really focused on compute power provided by GPUs. These players are growing quickly and are going to lead a new wave of investment in data center infrastructure in 2026.
Yeah, a really interesting topic. We've seen a lot of noise about NeoCloud, particularly in the US. Do you think it is very focused in the US, or do you think it's a global opportunity?
Yeah, so that's a very good point. So for now, it's definitely driven by the US. It's driven by hyperscalers who are, doing a lot of the AI deployments right now and are building these huge campuses we hear about on the news. It's also driven by the NeoClouds, as I mentioned, because for now, it's mostly in the US that they've been growing a lot. You have players like CoreWeave who are spending billions, building huge facilities, hundreds of megawatts. We're talking the type of capacity that could power mid-sized cities in Western Europe just for powering GPU racks. And CoreWeave is definitely one of the bigger players. And what's also interesting is that in the US, these NeoCloud players are mostly bankrolled by GPU providers like NVIDIA, who are trying to create alternative ways to go to market, and hyperscalers themselves, that are so much willing to get as much capacity as possible that they're buying capacity from these players. So that's in the US. At least it was, last two to 3 years, but there's a lot of growth now in Europe we're seeing, especially from new players like Nebius, Fluidstark, Scaleway in France, for instance. There's a lot of growth. So what used to be US only opportunity, up until I'd say last year, is definitely going to grow a lot in Western Europe this year.
So you mentioned growth many times, right? So this is effectively a new vertical, a new business model. You could argue whether actually is A lot of these are crypto campuses, crypto mining campus being repurposed. So a lot of greenfield deployment, effectively. Greenfield deployment means you need power, right? Is power the key for everything here? Having access to power, the key to success.
That's a very good point. So definitely, the amounts of capacity we're talking about, several hundreds of megawatts, is definitely putting a lot of pressure on the grids. And that's one of the reasons you're seeing a lot of new geographies emerge as deployment regions for these kind of AI cloud or neo clouds. The reason being, now time to power in mature markets like the FLAP-D is so long, sometimes can be 5, 6, 7 years, depending on the geography, that it's easier to go to what you could call tier 2 countries or tier 2 cities to get access to power in a quicker way. You're seeing a lot of growth in Nordics, Spain, Portugal, also, getting a lot of traction. France as well, because there's a lot of spare nuclear power, which is, it's not renewable, but it's low carbon intensity. New geographies emerging. And the other shift we're seeing as well is a change a little bit in the infrastructure that's being deployed. As you mentioned, it's much bigger, but it's also a bit different. It's a bit more modular because, the technology is still a bit uncertain. It's definitely liquid cooling. Probably, everybody's heard about that by now, that, AI requires, liquid cooled facilities. Reinforced floors, that's something people think a bit less about because these AI racks are putting pressure like several tons per square meter, which legacy facilities cannot handle. And another thing that's a bit interesting, we're starting to see in some recent deployments, is a bit less focus on the reliability on the infrastructure. Tier 3, everybody heard about tier 3. It used to be the gold standard for any cloud deployments. We're seeing some players look at, let's say, tier 1 or tier 2 type capabilities that come with, let's say, quicker time to market and a lot less CapEx for deployment.
I think it's fair to say that whenever we have a big boom from a new industry, new applications, everyone wants a piece of the new pie that is being baked in the market, right? And how many times we receive an email, a call from somebody who has a plant or a land plot and saying, how can I participate? I have power and therefore I'm sitting on a lot of money, basically, right? On a lot of money because I can just sell it to somebody building a data center and power AI. Is that the case? We're going to talk more about land bank later, by the way, so about land banks. But what's your view? Are land banks a good investment model?
Well, the main thing is we're seeing a lot of players that do not know how to do data center, as you mentioned, and say, okay, I'm sitting on a pile of gold because I have a lot of power that's available right now. Let's just say from experience, you also need to know what you're doing and how you're going to sell it. Because, the key question right now is getting power, sure, but, there are many players can get access to power, is how you're going to sell it and how you're going to sell it to, and with what type of reliability you're going to get from your tenant and how you're going to finance it. So, having access to power and land is just a tiny piece of the puzzle. It's a requirement, but it's not sufficient.
Great. Thank you, Sylvain. Right. Thank you, Charles. Who's next in our guest list?
I'm delighted to welcome Richard Morgan in the London office. Richard, to you, and what's your prediction?
Thanks, Charles. So my prediction for this year is that we will see a reality check in some of the valuations around speculative data center land banks. So this is based on, despite the fact that there is a huge boom in demand for data centers, on the back of this, we've seen a lot of players piling in this land grab across Europe, looking to acquire land, applying for power, and in some cases incurring quite significant amounts of CapEx in developing that land bank. And this is both data center operators, real estate companies, energy groups. And while we do see a lot of demand coming, in some areas, this pipeline of land bank could far exceed what there's actually going to be demand for. So just to put that in context, Europe today has around 10 gigawatts of operational data center power. We're expecting that to somewhere between double and triple over the next 5 years until 2030. So we're looking at going from 10 gigawatts up to around 30 gigawatts. But if you look at Italy alone, there are 42 gigawatts of grid connection requests just relating to data centers. So it illustrates the level of pipeline scale relative to what we're actually expecting in terms of deliverable demand in Europe.
Well, that's a really significant amount of sort of additional demand beyond what the supply chain can actually deliver. Do you think that means that makes it difficult for investors who have not gained exposure to get exposure to data centers?
It certainly plays into the consideration. I think we see a lot of early stage data center opportunities where they have secured some land, they have made an application for power. And I think it's quite difficult now for these investors to unpick this secured land bank from what is a viable opportunity that can be transferred into data center revenues. So I think not all land bank is equal. And it's certainly going to be a big difference between an established data center platform, which is developing its land bank in parallel to be able to market new sites to its customers, versus a completely greenfield opportunity where they don't necessarily have that track record in commercializing data centers. So it really needs to be assessed on a case-by-case basis, but it is certainly a challenge for investors today.
I find fascinating the fact that we just finished talking together with Sylvain about GPU as a service, and the prediction is all about growth, right? In 2026 and beyond. So a lot of power is needed, right? And therefore we need those land banks to deploy these data centers. At the same time, what in your prediction, you suggest that we need to be cautious, right? Because there is a lot of potential supply. What are your recommendations for investors? So if somebody comes today, pick up the phone and say, I have power cubes, I have this land plot which is powered. How do you suggest them to look at it?
Yeah, absolutely. So you need to look at the specifics of the management team and their ability to take that from a piece of powered land to a successful commercialized data center. So typically you need to get all the building blocks in place at the same time, which are land, power, financing, and crucially, those customer contracts. So if it's a player that doesn't have a track record of selling to data center customers, there may be partnership models, joint venture models that can help with that commercialization. And it also depends where this land bank is. It's still quite difficult to secure big plots of powered land in certain supply constrained locations like Frankfurt, Amsterdam, London, Dublin. So there can be quite clear opportunities if you can secure the right land and get an attractive place in the power queue in some of those locations. But if you have a plot of land in a remote part of the Nordics, for example, that can be quite easy to come by. So we see very large pipelines in certain geographies. And I think there is really assessing their ability to commercialize that. So then it's coming down to what will these potential data center customers look for in selecting which land bank holder they decide to go with. So some of the key factors here are ability to deliver capacity on time. So I think this is why these land banks are necessary. You need to be able to show you've got a site you can develop. You need to show a confidence on the timing that power can be delivered to that site. But they also want a partner who can manage the increasingly complex environments needed for developing data centers, particularly as we move in towards AI and higher density liquid cooled environments. So then looking at a partner which can show operational credibility, track record in delivering data centers, those are all going to be key factors in some of these customers deciding which data center platforms they go with. So I think from an investor's point of view, I think a land bank is an important part of the picture, but it's always important to understand how able that particular partner will be to commercialize that site and secure customer contracts.
Thank you, Richard. I think 2026 will be another year of stellar data center deals. I think there's going to be different tacks, different directions taken, but yeah, we're not going to see a shortfall in DC deals this year. Okay, maybe. So thank you, Richard. So maybe changing tack slightly and into fiber. And over to you, maybe, Ali, to talk about fiber and your prediction.
So my prediction is very simple. 2026 will be a key year for FTTH, and the prediction is refi or retreat. Actually, it was not the real name at the beginning, but our marketing team decided that refi or die was not appropriate for a podcast. But here I am. Please, Abby, do not edit it out. Right? So refi or die, 2026, a crucial year for FTTH. Why we expect that? Why expect 2026 to be a pivotal year?
Yeah, particularly why are so many FTT players in trouble?
In trouble, yes. So if you think about it, the FTTH boom started a few years ago now, right? Yeah. 5-6 years ago, we saw a lot of CapEx being put into the market, into greenfield deployment in the access network. Before that, it was more on the core, on the backhaul. And we get to the point where a lot of the regional financing deals come up to maturity. A lot of them are actually more project finance structures. They need to move to a different type of deals. And these basically create trigger events that mean that the borrowers, so these FTTH infracos, need to access the market to gain access to fresh funding. If you put these together with the fact that we had a big disparity in performance between players, either because of undelivery on the commercial side, so basically take up, or on the capex side, or difficulties in gaining the right scale to have high margins. If you're putting all of this together, it means that 2026 will be a year where access to capital will require deeper scrutiny of the performance of the company and the future outlook of each of this company. So it's going to be a year where we're going to have a natural pause where we can look back at the performance and then look forward and reset our expectations on how FTTH businesses will perform going forward. And we need to make sure that this performance, this new business plan, are married with the right pocket of capital in order to continue funding this vital part of the digital infrastructures that we need every day.
Yeah, absolutely. Core piece of infrastructure that everybody's needing. What do you think is going to happen if those refinancing processes do not go smoothly? It's just a provocative question there for you.
Tricky questions, right? And well, it depends from which point of view you're looking at it, right? If you are the equity investor between the platform, the main implications are you're no longer in the driving seat, right? Somebody else will decide the future investment. It might mean that lenders will intervene a bit more, be more active. There might be, okay, we expect some of the equity investor to either be wiped out or to reduce in terms of value, and therefore not get the returns they were initially expecting, could be sold out, so therefore driving consolidation, especially in fragmented markets like UK or Germany. One interesting thing that we can expect is also new players to come in. We're talking about tactical opportunity credit funds who can sneak in, buy debt on the cheap, and use that debt as leverage to become more active in managing the assets and take over control. Clearly, the only way to avoid all of this is to be in the driving seat, as I mentioned before, which means that you need to drive and deliver a smooth and efficient refinancing process, be in control over your destiny.
Yeah, I do think that 2026 will definitely be the year where winners and losers will become much clearer in the fiber market. And yeah, there'll be some successful refis and some painful ones, I think, this year.
Yes, agreed. It's going to be a good mix. Similar to what some colleagues mentioned before in other sectors, right? There's going to be a big bifurcation between the winners and the losers. And it's not going to be about having the right to run business models. Sometimes it's just a matter of who got there first with scale, or you're playing in the right market, you're not playing the right markets. There are a lot of factors at play. So there's not a single recipe for success here. That's the problem.
Yeah, absolutely. So appreciate we're sort of getting towards the end. So one last prediction to go for myself, and that's all about 4-3 consolidation in the mobile industry. So very much a hot topic, should we say, and one which has been long discussed and long in the making. Now, obviously, we've seen 4-3 before in a number of markets in Italy and in Spain. Whilst those were very much positioned as transformative for the market at the time, they did have the unfortunate side effects through the remedies of letting in new entrants into those markets. So we have Iliad arriving in Italy, which you may know a few things about.
Which means that this was not really a 4-3 consolidation effectively.
And now we're seeing a not dissimilar journey for the Spanish market with the arrival of Digi, which is doing a remarkably good job on customer acquisition and infrastructure deployment. So yeah, that's certainly changing the market there quite considerably. So we have seen it before, but not necessarily with the success that it may have had. However, that has potentially changed with the fact that in the UK, the Vodafone 3 merger finally got clearance in 2025. And because of that, with no significant other remedies, so there's going to be no Iliad or Digi entering the UK market. And from that, you can see, other large European operators looking at that as a precedent and thinking, well, isn't it about time that we had a consolidation in our markets?
I think there is a bit of an elephant in the room that we need to address. 2026 started with a big announcement, the run share deal between TIM and Fastweb Vodafone in Italy. So you talk about consolidation in the sense of a merger, right? But what about run sharing? Is it still a hot topic?
I think run sharing can play a part. In some ways, they are complicated deals that take quite a long time to execute, but they certainly give you the infrastructure synergies that are sort of long required, and potentially spectrum synergies as well. Don't underestimate the cost of spectrum in many markets. So I think RAN sharing certainly plays a part to play, and maybe that's the way that Germany will consolidate, potentially an 1&1 and Telefonica, or even a Voda RAN share could be possible there, rather than out-and-out merger. But I think sort of coming back to the sort of 2026 prediction, I think there's two markets where we're likely to see action. We've obviously seen the original offer for SFR being rejected, but we're pretty confident that a revised offer is coming back on the table. And I think just the pressure that Iliad is under will make that offer at some point will be accepted. So I think, as a prediction, that France may be the next market where we'll see a 4-3 merger. And I think you mentioned Italy. I think that there's a good roadmap in Italy too. I think the Wind Tre and free option there in Italy will be the most obvious one. I think merger with free with other operators like Vodafone maybe just a bit harder to do, particularly as Fastweb and Vodafone are still sort of being integrated. So from that perspective, we are also predicting that in 2026 we could see a announcement in Italy as well. Spain is the other market where there's a clear opportunity for 3 now that Digi is becoming so active and so aggressive. Zegona is the obvious seller there, we think. However, exactly how that shapes up, given Zegona's high share price, means 2026 is probably unlikely, maybe a few years yet, but that will certainly be, discussed all throughout the year. Yeah, a very interesting time, I think, in the sort of, core telco world from a consolidation perspective. And maybe this is the sort of inflection point that the market really needs to start, driving value creation for shareholders.
Piece of information that I want to add, that you correctly mentioned that run share deals are extremely complicated, and both me and you probably work on quite a few run share deals that were never surfaced the price and would never do. But the TIM Vodafone run share actually was first announced in 2019. And, it's interesting that it's back on the never implemented, of course, and now it's January 2026 and it's back on the table. This is how hard and unpredictable this market is sometimes.
Yeah.
One question to close the loop is, what does it mean, of course, for lenders and investors in digital infrastructures, or better, into towercos? What does it mean for them?
Yeah, I mean, when there's a RAN share in the market, I think there's an opportunity to sort of demonstrate as a towerco in particular your understanding of client needs and your ability to flex where required, while still maintaining the revenue line that you need to support the investment thesis. So it's all about the towercos that listen, the towercos that think, and the towercos that provide a win-win solution for all players are the ones that are likely to win out when it comes to consolidation. Because ultimately consolidation is all about trying to drive a certain amount of cost out of the business. So I think there's a lot of learnings, I think, from past mergers about how to go about it, and particularly how not to go about it. So I think from that perspective, and I think just on the lenders as well, lending into the core operators, it's certainly an interesting time. I think there's a lot of opportunity for these consolidations will produce potentially new capital stacks, which will be interesting, and a lot of money to be spent in terms of consolidation. Certainly in the UK, there's 11 billion to be spent. So from that perspective, I think it's a good opportunity for lenders. I think there's a lot of things that really need to understand about the merger process and how long synergies take to release. But yeah, it provides opportunity as well as well beyond what people would otherwise expect a consolidation to do.
Thank you, Charles. So this was prediction number 6, the last one for these years. Are we going to be right? Are we going to be wrong? Well, let's discuss it during the years. Any final remarks from your side before saying?
I think 2026 is going to be a fantastic year. We're certainly looking forward to it. We saw an uptick in activity, the second half of 2025, and we're only seeing interest and activity straight from the get-go in 2026. Reasonably good looking pipeline going forward. So I think it's going to be certainly an interesting year.
And thank you all for listening and for joining us today. You can continue subscribing to our podcast. Also follow us. We'll continue producing a lot of free insight and content for all investors, right? Corporate investors, equity investors, and lenders. There is content and insights for you all. If you have any questions, you want to launch any debate on any of our predictions, either because you like them or you don't like them, even more interesting at that point, right? Please do reach out and let's discuss it, right? Let's get to know each other. Goodbye.